Obviously, IPOs have been in turmoil. Peloton is down again today after slipping in its public debut, raising questions about valuations and the investor climate. This, as WeWork now says, and according to reports, will be halting new leases with big tenants in New York and London to cut their losses there. Here to make sense of it all is Shark Tank star Robert Herjavec, founder of the Herjavec Group here at Post 9. It's good to have you back. Good morning.
Thanks for having me, guys.
So this is a report in the FT about the new leases, but biggest commercial tenant in New York, one of the biggest in London. What would it mean to the commercial, at least, if in fact this happens?
It's bad. I mean, they're the largest tenant in New York, the largest tenant in London. I think they're the largest tenant in Chicago and a bunch of other major centers. And, you know, especially if we're heading into a recession and things aren't going to be great, it's bad to have one of the big commercial lenders go out. And I wonder what the exposure is for some of the large commercial companies out there.
Right. That said, market's actually gotten a little bit better, right, in the past, couple of months, some argue?
Yeah, I don't know if we're going into a recession. It was all the buzz a month or two ago. But I'm feeling very bullish, and I can only speak from a private company way. The cost of money today, like I look at the trends, I look at the China and all the other trade issues, but as a guy running a $300 million business, what impacts me the most is the cost of money. And you cannot beat the interest rates today. It costs me nothing to borrow money today. And as a business owner, that's really powerful. If I can borrow at 2-3% and grow by 10 or 20%, I'm going to take that all day long.
So what we're seeing in residential makes sense to you as well, this sort of rebound in housing?
Yeah, it does make sense to me. And I think I'm not convinced we're heading into a recession. I think the economy's strong. I think there's a lot of capital investment going on. But, you know, I guess we'll see.
If you're benefiting from an extremely low cost of money, you're competing against people probably who are too. Do you see that enabling anything that's sort of excessive or a little bit wild in the markets in terms of private investment, startups, or has a lot of what's gone on in the markets lately here kind of put that in check?
Yeah, it's a great question. What I am seeing is because the interest rates are so low, it's putting a lot of pressure on funds to get greater returns. So the amount of liquidity in the market is not great for somebody like me. So I'm competing against people that are raising incredible amounts of money. They have really no game plan to get to profitability, and that's always dangerous. When you build a company where the only possible exit is a sale or a ludicrous IPO, you haven't built a great business. But if you can build a great business, you can always get to a liquidity event.
Speaking of IPOs, we have a wall, I think, built a graphic of IPO performance this year. Smile Direct down 41, Lyft down 41, Uber down 30, Peloton's down 16, Slack's down 14. What is happening?
Yeah, gosh, you know, I really thought Peloton was going to do great. I don't have a Peloton. I'm a huge SoulCycle addict, so I have to say that. But they have a great recurring revenue model. I think their recurring revenue is around 220 million a year. That's a great business. What it tells me is if you're losing money, it's probably not a great time to do an IPO. As great a company as Peloton is, they're still going to lose. I forget the dollar amount, what it is. You know, Lyft's losing money, Uber's losing money. The IPO market is really not very kind to companies that aren't making money today.
In a vacuum, though, last week, if you knew all of Peloton's financials and their plan for growing and the scale, what would it take to scale their business? You said it's worth about $7 billion. You wouldn't necessarily say it's a terrible thing. That's what it's worth right now after that decline.
Right.
It's kind of about what the ask was in terms of the IPO price.
Yeah, no, I was offered shares in the pre-IPO, and I took some because I thought it's a great business model. You know, in the end, they probably went to the high end of the range, which probably wasn't smart because I think they felt good about their numbers. There's a lot of appetite pre-IPO, I can tell you that. I would have priced a little. I always like an IPO price that you always want to pop on the first day. So I think it would have been a little smarter to price at the lower end of the range and hope the market rebounds from that.
But overall, you said you invested. You like the business model.
I love a recurring revenue model. In our business, you know, 1/3 of our business today is recurring. And as a business owner, when I can wake up every month and know I have a certain amount of revenue coming in, that's very powerful. In our space, recurring revenue usually gets valued at 4 to 8 times top line revenue, as opposed to an EBITDA model. So it's very powerful.
Right, it's a much higher multiple.
Yeah.
I guess the question is how many people are going to be locking in for that recurring revenue, right? I mean, do you have a number in your head of how many subs they need to actually make it work?
I don't. So on one hand, I know the recurring revenue is great. I know they're getting a lot of subscribers. I think I forget the number, but you've still got to keep your costs in line. Recurring revenue is great. It's a great dream and it makes everything happen, but you've still got to run a solid business. And I think they've spent a lot of money in order to gain market share. But eventually, you've got to get over that hump, and I just don't know where they are. And I see a lot of competition coming out. SoulCycle's coming out with a competitive product. Nordic Track, I think, is announcing a spinning product. And it works great. I mean, look at me. I'm 85 years old. I'm in great shape.
You look good.
Because of SoulCycle.
Not a day over 80.
Not a day over 80.
The other big story today is cyber. And this DoorDash breach, which exposed nearly 5 million users, vendors, delivery people. I mean, it's been a while since we've had to deal with a real hiccup in this space. Right? What do you think it means?
Yeah, I just had a meeting with a big customer in that same space to me, and they said to me, no one's going to breach us. What data do we have that anybody wants? When are companies going to wake up and realize they're the custodians of clients' data? And when you have privacy information, when you have my credit card number, when you've got that kind of data, you got to take care of it. And it amazes me that still today, CEOs aren't paying attention to that.
You don't think they are? I mean, it feels as though it's become a board-level issue. You don't think
it is a board-level issue,
enough?
But I don't think people are taking it serious enough. I think that there's two different kinds of companies, people that are really invested in cyber and see it as a competitive edge, and other ones that kind of, pay favor to it and make minor investments in it and really isn't part of their culture. But I think you're going to see more and more of that. Like I went the other day to a retail shop and I wanted to buy a bicycle for my twins that I can drive them around in. They wanted my credit card information, obviously, but they wanted my personal home address. They wanted my email address. Here's the amazing thing. I said, I don't want to give it to you. You know what the guy said to me? I can't sell you the bike.
Oh my God.
It was $2,000 bike. Because you know what? I don't trust what they're doing with my information, and I don't want to give it to them. So I think it's unfortunate for DoorDash, but I think we're going to see a lot more of those, and we're going to see regulations around privacy.
Yeah. Sometimes it's a relief just to say, here's some cash, give me that good.
I just want to buy stuff. Why can't I buy stuff?
Robert, thank you. It's always good to talk to you.